Hello guys, Mr. Stoller here from your tutors, guys. Today we're going to look into this is our final class of grade 12 financial maths. Okay, we're looking into sinking funds. Guys, don't forget to subscribe to our YouTube channel and also follow us on Facebook and Instagram. Okay, let's see what we have today. You now know how I like my classes. I like to start with questions. Try those questions. If you don't know them, the class is for you, but again, don't forget to come back and try them, attempt them, and those are the answers. If you're not getting them correct, you know where to find us. Okay, thank you so much. Let's look into it and see how far we can go today. Now, let's understand what are sinking funds. Okay, what are sinking funds? Now, I want to explain to you in this way. Let's say you have a machine here. Let's say we have a big machine here. Let's say it's a machine here, and this machine here is okay. Let's just put the machine there. Okay, now, and we are saying this is 23. Okay, and we are buying this machine is bought 2023 and it's costing let's say 650,000. Okay, now what happens is that this machine, when it's bought, it's going to be used, and if it's used, it's going to depreciate in value. So here, if it's used, it's going to depreciate. Now, depreciation means that the value decrease. So decrease in value. And now, if it decreases in value, it means that the final, if we were to look after 5 years, this will be 2028. Let's look what will happen in 2028. 2028 now, the value of the machine now will be actually less than the 650,000. Let's say suppose it depreciated and now it's 200,000. It's 200,000. And this, what do you call this? We call this scrap value. Scrap or book value. Okay, it will have some value, but we call it a scrap value because they've reduced its value. Okay, what about if we want to buy the same machine in 5 years' time? In 5 years' time, the same time in 2028. Now, this one here, remember this one is an old one, and this one we want to buy a new machine. And the new machine now is costing, for example, let's say it's now costing 900, it's called 1,000. So it's now 900,000. The new machine is now 900,000. So we are saying in this case here, the machine have got appreciated, or the amount increased. So there is an appreciation in terms of the price there. Appreciation. What caused appreciation is inflation. Increase in prices. Inflation. You know that the bread that the price of bread that we bought last year, 2022, and now is actually different. They've got increased. The same applies to the same machine that's going to happen. So this is due to inflation. So what happened to the price? Price increases. Now, when you're buying expensive machine, like let's suppose it's a company buying expensive machine, it needs to replace it after 5 years. Let's say after a certain period of time, after its lifetime, where it's actually working effectively, it needs to replace it. But when it's replacing it, it needs to sell the old machine and buy a new machine. So the difference in this amount of the 200,000 that's going to get and the 900,000 is what we call the sinking fund, because that money need to be saved. Okay, so let's say if you are to subtract here the two value there, what will you get? We'll get 900,000 minus 200,000. What are you going to get? You're going to get 700,000. So this needs to be saved. So these are the savings that need to be done. And that's what we call a sinking fund. This is our sinking fund. So this is a sinking fund, that the amount of money that need to be saved so that it will be able to be used to buy the new machine. It will be added to the scrap value to buy the new machine. So how do you get sinking fund? Sinking fund, you get it by saying the new value minus scrap value. That's how you get the sinking fund. So new value minus scrap value. But now, how do we save? How do we save this money? The 700,000. We need to make regular payments. And regular payments, when you're making regular payments toward the 700,000, what is that? It's future value. So we're working towards future value. So now we're going to be dealing with the future value annuity in trying to save the sinking fund. So to have the sinking fund available, we'll use the future value annuity. So in this case here, future value, we know future value, we're going to say our x1, 1 plus our I, the power of n minus 1, all over I. But for the depreciation, it means that the scrap value, how are we going to get it? We're going to get it by depreciation formula, which is P1 minus I, the power of n. What about the inflation here, the appreciation value, the increase in price? We're going to get it by saying A is going to be equal to P1 plus our I, the power of n. Because it's increasing in value, here it's decreasing in value, but here we are saving, we need to make regular payments. So regular payments are made here. So regular payments, these are regular payments made to achieve to attain the 700,000. Okay, so we're going to be dealing with this now, where we are supposed to calculate the appreciation, the depreciation, and also the sinking fund. That's how you're supposed to see it, and that's how you're supposed to understand it. Now let's move on and see if our first question. A school purchased a large washing machine equipment for 270,000. The cost of the new machine is expected to rise by 15.7% per annum, while the rate of depreciation is 17.9% per annum on reducing balance. The lifespan of the machine is 5 years. Find the scrap value of the equipment, of original equipment. So scrap value, what do we use? Remember, A is going to be equals to P1 minus I, the power of n. Now our P, we have it, 270,000. Okay, 1 minus our interest here. For the depreciation, we use this one here. We use this one here for the depreciation here. This is the one that we're supposed to use. And it's going to be 0.179 over, it's not over anything there because it's per year. So it's just going to 0.179 to the power of, how many years there? It's 5 years. Okay. Yeah, that's our value there. So we can say shift store in A. Let's just save our value there. Then find the cost of the new equipment in 5 years time. What formula do we use? A is going to be equal to P appreciation, guys. 1 plus I, the power of n. Okay. Let's substitute the values. So we see that the new price there is going to be 559,796.99, and we can just say shift store in B. Then we have all our values there with us. So you can see that the machine price have increased, and also the depreciation to also depreciate to 100,000. Okay. Now the next question is saying find the value of the sinking fund that will be required to purchase the new equipment in 5 years time if the proceeds from the sale of the old machine or scrap value will be used. So it means that what do you use here? Sinking fund. Sinking fund, we know that it's going to be new price, which is 559,796 minus 99 minus 100,711.61. What do we get? We can just go to our calculator there and say recall B minus recall C, recall A, sorry. Then we get 459,000. So it's going to be 459,000 459,085, 37, 38. Okay, that's what we get there. That's our sinking fund. Now, let's move on to the next question. So we can say this value that we got here for the sinking fund, you can say shift store in C. Now, a school, let me see here. Yeah, it's correct. You are going in the right direction. Okay. Now, a school, okay, we have that question already. Now, the business sets up a sinking fund to purchase for the new machine. Payments are to be made into the account paying 11.3% per annum compounded monthly. Find the monthly payments if they are to commence 1 month after the purchase of the old machine, of old equipment, and cease at the end of the 5-year period. Now, what do we know now? We are looking for X. So in this case here, we are dealing with future value. So up until the compounded monthly, it means that it's going to be 5 times n year, it's going to be 5 times 12. What do we get? It should be 60 there, 5 times 12, 60. So the payment starts one month after. So that's our X there, starting there, T2, and also ends there. That's what is happening here. So we don't need to stress to add 1 because the payment is not starting immediately. The payment starts 1 month after. I think they've mentioned that payment starts 1 month after there. Yeah, 1 month after. So that's what matters here. If they say it immediately, we're going to put on T0. And if you attended the second lecture, lesson 2, I think you understand what we mean now. Now, so in this case, we are looking for X. So using our formula, FV is equals to X1 plus I, the power of n minus 1 over I. Will be looking for X. And how do we get our X? I think now you know, guys, we take the I there. So it's FV times our I over what we have on top there, which is 1 plus I, the power of n minus 1. Okay. Let's try to find out what we get from there. So for now, we know that our I is equals to 0.113 over 12. Our n, we have it, and we are looking for X. FV, we have it. FV, we just calculated it, and that was FV is on the previous, which is the sinking fund value, which is 459,085. So it's FV, it's 459,085, comma, it's comma 38. Okay, comma 38. Okay, let's try to put in the values and see what we get. Okay, so if we punch our calculator, we can, this is what we get, 5,727,4, and we can now put this, say, shift store. We can put it in D. There's no problem. Just remember to know where you store it. Okay, but now we have found the monthly payments that need to be done. Let's move on to the next one. Now, suppose that the business decide to save the equipment, service the equipment at the end of the of each year for a 5-year period. 4,000 will be withdrawn from the sinking fund at the end of each year, starting 1 year after the original machine was bought. Now, calculate the reduced value of the sinking fund at the end of the value of the 5-year period due to these withdrawals. Now, what happens now is that let's just draw our timeline again here. So we have T0, T1. Let's talk of this one in terms of years, 5 years. T2, T 3, T4. And T5. Now, what happens now is that we are saying how much is being withdrawn? 4,000. So when you are withdrawing 4,000, when you withdraw 4,000, you are not only withdraw 4,000, but you also withdraw with the interest that it was going to earn if it was to stay in the bank. Okay, so what happened now is that we need to know that when we are withdrawing that money, it's gonna grow as well. It's supposed to be growing. So we are actually taking it and its interest, which we need now to calculate to say what will be the interest there. So now if you have to take, if you have to look at this, if we have to start here at 4,000 after 1 year, what we call 4,000, taking out 4,000, and then again taking out here 4,000. Here again 4,000, 4,000, 4,000. So what happens? We are saying minus, 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 minus. But what happens is that this month, the first 4,000 was supposed to grow for how many months? That's the question now. It was supposed to grow for how many months? Another 4,000 on the second year was also supposed to grow, but for how long? How many months? That's what you need to understand. Because remember here, it's compounding. It's compounding monthly, and for how many months it should have been. Now, what do we do now? We know that we need to find how many times were you supposed to, compounding periods in this case. The N, we need to know the N for the first 1,000, 4,000, the second one, the third one, the fourth one, the fifth one. Okay. So if we are to check here, let's deal with in terms of, let's write the months in terms of months here. This one is 0 and this one is 12. This one 12 times 24 after 2 years. This is 36. This is 48. This is 60 months. 60 months. So it means that for the first one here is gonna have 48 what call months to grow, and this one here is gonna have 36 months to grow, and this one here is gonna have 24 months to grow, and this one here is just going to have what called 12 months to grow, and this one just 0 months. Okay, so what you're going to do now to add, to get the total amount here of that amount, the amount that we're supposed to get here, the amount withdrawn here. So total withdrawal is going to be equal to the first 4,000. It's going to appreciate. Remember here it's appreciating with A is equals to P 1 plus I, the power of N. So it's going to appreciate. How does it appreciate there? It's going to be 1 plus our I is our interest rate here of appreciation, because remember it's appreciating here. It's going to be it's going to rise by 15, 0,15. Okay. Okay. So here we're not taking this one here because this one is for the cost of the machine. But what happens now is that we are supposed to use the one for the sinking fund. The percentage it is appreciating with in the sinking fund is this 11.3%, because the sinking fund is paying 11.3% per annum component monthly. So it means that we're going to have 0.113 here, 11.3 over 12 to the power of 48. Okay, then it goes on like that. It's 4,000. 1 plus 0.113 over 12 to the power of 36. Okay, it goes on like that. Let's see when it's done. Okay, so this is what we get. If we are to add everything there, this is what we get. We're going to get 25,362.97. So what do we do now? Reduce the value of the sinking fund. So we know that the sinking fund here was what? The sinking fund that we were supposed to have there was a recall C, which is 459,085. So it's going to be 459,085, 377 minus 25,362, comma 62,9669. Okay, so let's see what we get there if we subtract the 2. Okay, minus 25,362,9669. This is what we get. We get 433,722, 433,722,4,41. Okay, so this is the reduced reduced value of our our sinking fund, because we are taking out, we actually took out 25,362 by withdrawing 4,000 every year. So withdrawing 4,000 every year reduced reduced the sinking fund by 25,362. Now let's get to the next question now and see what is saying. We have the same scenario now. Calculate the increased monthly payment into the sinking fund, which will yield the original sinking fund amount, as well as the as allow for withdrawals from this fund for the services. Now, what happens now is that we have got the sinking fund. We calculate the sinking fund, and we see that no, we are withdrawing for 4,000 every year. Now, when we withdraw 4,000 every year, what are we taking out? We are reducing the sinking fund that we are planning to use to buy the new machine. We are taking out 25,000 from that. So what must we do now? It means that we must know how much should we pay so that we can compensate for both servicing and also buying the new machine. So servicing the old machine and buying the old machine. What must we do? It means that we must have a certain value that we have, and that value, it must be the sinking fund plus the amount that we are reduced with the 25,362. So it means that in this case here, we are going to know, okay, we are going to use the future value again here. Future value. So future value says what? Future value is equal to x1 plus our I n minus 1 over I. So future value that we want here is equal to the sinking fund plus the amount, the total, the service fee, service amount, total service. So we're going to say the sinking fund here is let's just write down the values there. So what are we doing here? We calculated the service amount, the amount that was used for services is what, 25,362, and also the sinking fund that is needed to service to buy the new machine is 459. We add the two, then we get 484. So this is the amount that we must have. So what do we do now? Again, we come back and say, okay, what is our X now? What is our new monthly payment, so that we can be able to cater for both buying a new machine and servicing the machine. Now this is going to be X. Remember from our formula, it's FV times our I all over 1 plus I the power of n minus 1. Okay, let's substitute there. So this is what we're going to get now. We're going to get 6,043,82 from the original that we were paying before. We actually, when you're targeting sinking fund only, it was 5,727. But now, because we are now also including the service fee, that it's increased to 6,043,82. Okay, so I hope you guys understand how this one works, and also remember to use your future value formula and also how to calculate your X. Until next time, guys, thank you so much. Don't forget to subscribe to our channel and follow us on Facebook and Instagram.